Welcome to Friday Takeaway. This week we take a look at construction stocks, a sector 3 months ago analysts would have sworn up and down was actually solid, and this week wasn't, mostly because PM2M swings the axe again in an ongoing effort to cut debt, and we say goodbye to the HSR and MRT3 we hardly really knew. This, however, does cause a lot of issues, which we will talk about in a bit. Ex-PM Najib said that scrapping HSR was a bad move and that it would eventually pay for itself. But Mahathir argued that 100 billion ringgit for 100,000 jobs was not good math. UAB said in a note that MRT3's cancellation was a real surprise to investors, especially since the MRT project is seen as a public good and the first phase was well received. By the way, the government has a Kickstarter now, which raised 7 million ringgit in just under 24 hours. Not bad, Malaysia, but I don't know what the stretch goals are if you donate. A Birkin? In more developments, Mahathir also announced that the sales and services tax would make its return in September 2018, and from today, GST will be set to zero, as Hong Leong Investment Bank put it, zero-rised. Not only that, but the price of RON95 and diesel will be maintained at current levels. According to HLIB, this could lead to a consumption boost during the third quarter, and with Raya just around the corner, it should mean that consumers would take advantage to buy big-ticket items. Meanwhile, overseas markets were shaken by goings-on in Italy, which were calmed a little after it seemed like the government was trying to get their act together. But it raised exit fears again. This time it could be an Italexit, which despite the silly name is something to keep an eye on. The KLCI this morning, in 2 words, not good. It wasn't only a short trading week, but the market was also battered by the cancellation of those big mega projects. It spooked foreign investors who pulled out their money. However, some recovery today to 1,753.45 points. Let's see if it continues. MRT3's cancellation is going to be far-reaching, not just for overall sentiment on the market, which we have already seen and talked about, but actually to the companies that were supposed to benefit. So we look at 2 of them, namely Gamuda and IJM Corp, that would have benefited, and see what else they have going for them. Gamuda is one of Malaysia's largest engineering, property and infrastructure companies. If you have ridden on it, most likely Gamuda has had a hand in building it. It was involved in the first MRT and holds a toll concessionaire through their listed unit Litrak. MD is Datuk Lin Yun Ling. Double blow for Gamuda because aside from MRT3, Gamuda together with MRCB were the project delivery partner for the HSR. So it is really just waking up and realizing that poof, all your big projects / catalysts were all gone. And the share price took the brunt. And on Wednesday, short selling on the counter had to be halted as the stock plunged, wiping out more than 2 billion ringgit in market cap. The share price this morning still under pressure and was trading at 3.44 ringgit, which, however, is an improvement from when it closed on Tuesday at a historical low of 3.18 ringgit. Yet there is still more though for Gamuda. Yes, the cancellation of projects is a concern, but it's still the biggest in the market in terms of local projects, and the property division is well received according to analysts. And let's not forget the recurring income from its concessions, and it also needs to be kept in mind that toll concessions may be privatized. Credit Suisse has in fact upgraded its call from outperform from neutral, albeit with a lower target price of 4.50 ringgit from 5.05 ringgit. At the moment though, analysts are firmly in a holding pattern, as can be seen by the fact that majority of the calls are hold. Most likely are waiting to see how many more mega projects get the axe. IJM Corp is one of the country's largest conglomerates, also include construction, property development, quarrying and plantations, which is under listed unit IJM Plant. It wasn't only the cancellations that hit IJM Corp, like what happened with Gamuda, it was their bad fourth quarter earnings that also dragged the share price down. For its fourth quarter of FY18, the company saw a net profit drop by almost 96%, as all divisions just clocked in lower numbers, plus unrealized forex losses. Its share price took the hit full force, falling to its lowest level since 2009. And this morning, the bloodbath continues, with the shares clocking lower again at about 1.69 ringgit, although eventually it did improve a little to 1.79 ringgit. With the price so low, however, it should be kept in mind that IJM does have other businesses. Yes, they didn't do well, but they do have other businesses. And because it is so wide, it should help in cushioning some of the shock. Whenever there's a movement or cyclical, property for example, the bad earnings actually were just because some earnings were booked in earlier. But spreading it out means that it allows them to ride the whole cycle. And it has a good track record. It was awarded part of the contract from LRT3, and while any project now seems to be kind of fair game, it is still experienced and that will carry it better. According to Bloomberg data, analysts are still positive to an extent, with most still calling a buy over 50%, so it's clear that there is still some upside to be had.